let's talk about Euro USD dollar. So in the Euro, we got a lot of nice entry signals the last couple of weeks. So I'll just walk you through how we analyze the market and what we see the opportunities in and how to execute them. So as you can see, Euro USD dollar had a pretty nice uptrend on the daily chart for around a year since COVID low, and since then we only made higher highs and higher lows. But as you can see, since the beginning of 2021, we saw a breakdown. The market broke through this rising trend line. So we had here a rising trend line and the market broke through impulsively on the daily chart and cut through this low and through this low. We can see here found some support, but made a lower high and then a lower low. Where it found support for the first move was around this area, which is a continuous breakout pattern, breaking through the recent highs with a nice engulfing bar. There we found support and we had a nice engulfing bar again, this time bullish. So we can see this was a nice engulfing bar on the daily. And let's see how this played out on the smaller time frame. So on the forward chart, you can see after we got this low at this blue zone, we can see that we have a bearish outside bar, then we have some base candles, and then the market is pushing to the upside. And you can see if this move goes to the upside like this, we see this move to the upside, then now we can draw a channel because we can see, okay, if this moves up again, it could move like this, like it did, or it could break down. So these are the two opportunities, or it could move up a bit and then break down. So these are the possibilities which are most likely to happen. So what we do in this case is that we draw a parallel channel from the low through this low and then to the high. And you can see there's been some great trading opportunities around this area. We are having this high, so this you can see we are pushing through the trend line and then we're forming a lower high around this area and then we push upside inside this last high. The market is pushing to the upside, forming higher highs and higher lows, but we had this daily pressure to the downside. So you can see there are only 3 waves and we get some nice sell signals around this area. This is actually a pretty good trade because we have the upside of the channel, we have the break through the recent high, through the blue line, but you can see we are forming 2 pin bars. So this is pin bar number 1, making a fake breakout above the recent high and then touching the upper channel line. And then we're having another 4-hour candle again. And you can see they're only just like, let's see, like 5 pips higher. So this is where a lot of amateurs get killed in the market because they are placing their stop loss at the top. So they are executing their short position, maybe at the close of the 4-hour candle, but they're placing their stop loss too tight and then it gets taken out with the next candle. So you can see here it gets taken out on the 1-hour chart. We can see this even better. So what you're going to do in this case is if you got an entry signal and you got the first 4-hour pin bar, you want to give the market some room to breathe, like 20 pips on this time frame. So you can see we moved the stop loss a little bit higher, giving it some room to breathe, and it's above the upper channel line. And after this, we see the breakdown. So we get another 4-hour pin bar signal, which is a sell signal, and now we're having a double pin bar top at the channel line and at the recent high. And after we got 3 waves to the upside. So this is a really, really great trade opportunity we executed because we had multiple factors lining up. And that's what we teach at Financial Freedom Trading. You look for multiple confluence in the market. So you want to look for, okay, do we have a top? Do we have a channel? How is the market behaving? What is the general trend? And you can see that if we apply a Fibonacci zone, we can see, okay, that the market broke above the 61.8%, but it broke down again. And you can see maybe on the daily chart, it's better visible. We're having a nice daily pin bar. So no matter what time frame you're trading, if you're trading in the evening and only looking at the daily chart, there's a nice sell signal you want to take, because this is a nice pin bar from the recent price action, which is going down. So we're having this move, then we're having this, and now we get a pin bar. And this is where you want to open a short position. So on the smaller time frame, we got the impulsive break of the channel. So you can see this moved quite impulsively to the downside, and then it retested the channel. So this is a classic channel retest before we get the next push to the downside. It also broke down impulsively, so it cut this low and this low and this low. These lows all got cut through with this impulsive move. So when we get such an impulsive move, it's much likely that we get a retest, which also bounces up, and then another push to the downside. So if you did not get the entry from the top, from the 4-hour signal or on a lower time frame, you might have entered this on the retest of the channel. And again, you can see if we apply the Fibonacci zone, we are here nearly hitting the 50%. So this again is a great zone. We are having this low. If I apply, a support and resistance zone like this, we see, okay, the wick is touched with this wick. And again, the market did not close inside the channel. So this did not close with a huge bullish bar. No, it got rejected. And then we got the next engulfing candle. So this is another 4-hour engulfing candle, which tells us that the sellers are strong in the market again, and we get the next push to the downside. So if you get the entry around here or around here, how do you determine your target? So what is a good indication are Fibonacci extensions, because this is the general move of the market. Now, if we see a continuation, we want to see a continuation of this move. So we're expecting a push like this. And there is where the Fibonacci extension comes into hand, and you just apply it from the high to the low of the swing and to the high again. So here the high is touched. And a great target is the 100% extension. So because if this is a large daily uptrend and we are seeing a corrective pattern because we haven't broken these lows yet, so we didn't make a lower low on the highest time or the higher time frame, we would expect maybe see another push to the upside for this continuation. So we would target an extension of the first corrective move to the downside, and this would always be the 100%. So the 100% extension is the perfect target. You might get an extension of the correction like to the 127, but the 100% is a really, really great target, because if we break this low impulsively, what we did, it's most likely to push to the 100%. So this was one trade idea we executed in the last 2 weeks in Euro USD dollar. Another trade idea I posted on the Instagram stories. If you follow me closely, it was the counter trend movement. Because after we closed our position around here at the 100% extension, I expected another push to the upside, because you can see we get the impulse, correction, impulse, and then I would see another correction, which happened in the market. I don't know if this is, the last high and we get another push to the downside. This could happen, but we could also see, like this, and then finding bottom around here before pushing to the upside. So this is also very possible. You can see that we can see this move maybe, and then a continuation of the higher time frame. You don't only execute trades, let's say, in the overall trend direction of the higher time frame, you can also use counter trends on the smaller time frame. So you can switch on the 1-hour chart, for example, and after we get this push, we're expecting a correction to the upside. We can here see that we got a nice engulfing bar. So I'll just display the trade we took so you can see how it behaved. And this is the extension, and we are seeing here that we have some kind of falling trend line, which is broken with this engulfing bar. So we are having here a nice bullish break of this trend line, and you can see on the smaller time frame that we are forming higher highs. So the market pushed here and broke this recent high. So we had this high broken and we have this high broken, and it found resistance around this high. So this is where we took the entry again on this 15-minute engulfing candle. So after we got this push to the upside, we see some correction and we take this to the upside with the 15-minute engulfing candle. So normally I don't advise to trade counter trend because the trend is your friend, but in this case we are trading the trend on the lower time frame. So you can see we're forming higher highs, higher lows, higher highs, higher lows, higher highs. So this is again a trend, and we're trading with the trend, but on a smaller time frame. And on the higher trend, on the higher time frame, it might just be a counter trend movement. But it's still a valid trade because we have again multiple confluence, multiple factors lining up. We have the break of the trend line, we have the 100% Fibonacci extension, we have the 1 hour engulfing candle. And this is multiple factors lining up, and then we get the 15-minute, and now we are in the trade in the long position. You can see that we get the impulsive move to the upside, which breaks the last high on the 15-minute chart. This high gets also broken, and again market pushes into the resistance, which is this high. So it breaks a couple of highs and then it corrects as soon as it reaches this high. After this, we traded this trade according to our management rules. So this is what you learn also in the Freedom Trading course, how to manage your trades and when to exit them. So because this push to the downside found support around here, we would expect a bigger correction. So we wouldn't expect something like this before another push to the downside. No, this pushed nicely downside and then we're expecting a bigger correction. This is what we are looking for. So again, we can apply the Fibonacci retracement tool from the high to the low, and our target in this case is the 50% Fibonacci level. You can see we adjusted the stop loss according to our technique, and then the target got hit with this candle. Here the trade got closed and we took out of the position with a risk reward from 1 to 8 to 9. So this was the last recent trade I took in the beginning of the week. You saw it in my Instagram stories where I posted this entry on, this was on Tuesday morning, around 7 o'clock was this entry made. So we entered the trade and hold it for 2 days before exiting around the 50% Fibonacci level. Since then, we saw the break to the downside because we don't know yet if this is, the first push to the upside or we see a trend continuation. So we see a continuation to the downside, but currently we consolidated around this area. So you can see we are having here some consolidation and then we get this break to downside. Then we have again a flag pattern and then a push to downside. So on the 15-minute chart, this is the continuation pattern. You can see in the market breaking through out of this consolidation area, and after it breaks down we get a flag and then another push to the downside. And now we are just sitting on our hands and let the market develop because it's not clear if this pushes more to the downside, but currently you can see, if I just make this white, so on the 50%, the market is currently sitting at the 50%, which also lines up with this high, and just a quick zone. So we can see here this high, this retest, and then breaking through, finding support. So the market is currently sitting at a 50% and could easily, go back up, or maybe like this, or going back up further, or forming a bigger correction. So it's Friday today. I'm waiting how the market closes, how the weekly close is going to be, and then I do my analysis on the weekend and see if there is a trading opportunity for next week in Euro USD dollar.